Are you ready to rethink everything you thought you knew about getting out of debt and building lasting wealth? The story of Rose Hahn, a self-made millionaire, is not only inspiring, it might just flip your entire financial strategy upside down. But here's the part most people miss. It's not just about penny pinching or hustling harder. Rose's journey reveals a step-by-step system she calls the financial waterfall. And it challenges mainstream advice in some surprising ways. Years ago, Rose Hahn found herself drowning in financial stress, burdened by 6 figures of debt. Most of it stemmed from student loans, with roughly $5,000 looming on her credit card. The emotional weight was overwhelming. She confessed that the shame and anxiety were so suffocating, ignoring her financial chaos felt easier than facing it. Sound familiar? This trap catches millions. Instead of relaxing in paradise, guilt and worry ruined the trip, finally motivating her to confront her finances head-on. Back home, Rose vowed to transform her debt from a curse into a source of motivation. She dove deep into financial literacy, consuming books, attending workshops, and finding mentors. And then came the big moves. Rose began by fighting for a raise at her job and creating fresh income streams with side gigs, like freelance work. But here's where it gets controversial. Simply earning more isn't enough. You have to manage your expenses so that every extra dollar actually goes toward debt, not just fueling fancier spending habits, Rose insisted. This concept, often overlooked, is where many high earners still struggle. Her approach became especially strategic. She attacked her high-interest credit card debt first, then started investing even as she continued to pay down her student loans. As she ramped up her income sources, her wealth began to multiply. Rose's initial side hustle was freelance bookkeeping on Upwork, but she didn't stop there. What began as free personal finance meetups quickly evolved into a profitable financial education business. Today, she runs her own company, earns from online courses, partners with brands, uses affiliate marketing, writes books, and boasts nearly 1 million YouTube subscribers. This diverse range of incomes became the fuel for her investments, which now includes stocks and real estate, propelling her net worth up into 7 figures. In her 2025 book, At a Zero, Rose reveals the detailed framework she used to go from deep debt to self-made millionaire. And this is the part most people miss. It's not a random checklist, but a precise 10-tier system where each step builds on the last to maximize your financial efficiency. First comes the emergency fund. Before worrying about aggressive debt repayment, Rose says to save at least $2,000 in a high-yield savings account. Why? Because sudden, unavoidable expenses, think medical emergencies, car trouble, or a surprise vet bill, are what often trigger new credit card debt, not daily luxuries like lattes or online shopping. Having this cash buffer means you won't spiral deeper into debt when life throws a curveball. Later, you'll build this fund further, but $2,000 is a critical starting point. The next step is blasting away those high-interest credit card balances. With average credit card rates nearing 25% in the U.S., these debts can snowball rapidly. But contrary to popular wisdom, Rose advises putting off aggressive repayment of lower-interest debts like student loans, car notes, or mortgages. Instead, just pay the minimums for now. Think of it like an ER triage. Handle the most critical issues first. Credit card debt is the true emergency, she emphasizes. Does this go against what most financial gurus say? Do you disagree? As soon as your most expensive debt is gone, it's time to start investing, the real key to growing wealth. Rose suggests contributing to your workplace 401k, especially if there's a company match. That match is free money, so always grab it. Once you're investing, boost your emergency fund to ensure you're protected, and then take advantage of other tax-favored accounts, such as Roth IRAs, which grow tax-free, and HSAs, which combine tax-advantaged healthcare spending with investment growth. After topping up your tax-advantaged accounts, shift your focus back to debt. Pay off any lingering car loans or student loans. Then, start investing in a regular brokerage account. Rose recommends low-fee, diversified index funds and ETFs, such as VTI, Vanguard Total Stock Market, VXUS, Vanguard Total International, and VNQ, Vanguard Real Estate. But here's a hot take. Rose says you should prioritize retirement savings over saving for big purchases like a house or your child's college fund. You can borrow for a home or college, but you can't borrow for retirement, she stresses. Do you agree with putting retirement above everything else? The final step in her waterfall is optional. Paying off your mortgage early, if you have one. Rose herself chose not to buy a home for personal use, but instead invested in rental properties to grow her portfolio. The core genius of Rose Ann's system lies in the sequence. She compares it to playing a game of tax-advantage Tetris, always filling the most efficient spots before tackling less optimal ones. This isn't just how the wealthy build their fortunes, it's how they keep it, by intentionally placing every dollar for maximum impact. More earnings help, sure, but strategic placement makes all the difference. And now, over to you. Do you believe the order of these financial steps matters as much as she claims? Would you prioritize saving for your child's education over aggressively funding your retirement? Is it smarter to invest before paying off student loans? Let's hear your thoughts. Are you cheering Rose's method, or does it challenge your financial beliefs? Share your opinions below, and let's spark a conversation.